Welcome to the Seattle Investors Club podcast with Julie Clark and Joe Bauer, where we share the nuts and bolts of real estate investing from our 20-plus years in the industry. Sit back, relax, listen, and immediately take action. Are you ready? Here we go.
Welcome to the Nuts and Bolts of Real Estate Investing podcast. My name is Joe Bauer, and I'm here with my co-host, Julie Clark. Julie, how you doing today?
You know what? I am doing super awesome today, Joe. I'm sitting here at my home office, sitting in the kitchen, having the sunshine actually glare into my eyes for some reason here, which is awesome, which is, I think, the opposite of what's going on with you. Up out in the snow squall, we just lost you for a second on your computer. Tell us what's going on in your world today.
Yeah, it's actually an overcasty day today. Yesterday was more fun. We were driving around trying to get to a ski hill, A Basin actually, and it was snowing and blowing so hard that you couldn't see more than like 10 feet, 20 feet in front of you. So we got to where you get into the mountain road and then the road was just closed. So we had to turn around, go hang out at a coffee shop for about an hour and a half before it passed and then continue on with the day. But it was pretty crazy.
Awesome stuff. Where are you guys sleeping? What parking lot are you sleeping in lately, or what field or what?
Technically, we're at something called the Kayak Lot in Frisco, Colorado, which there is a city law that you're not supposed to sleep in your vehicles around here, but they seem to ignore this particular lot. I mean, there's probably like 10 other people in RVs or campers like us in the lot every night.
Now, when you guys are in the lot like that, and there's a bunch of like-minded people, same as you guys there, do you guys get out and socialize with these people, or does everybody pretty much hunker down in their own setup?
If it's warm out, we'll socialize, but like last night it got down to I think 7 degrees, 6 degrees. So at that point everybody's pretty much hunkered down, and if you can see people as they're pulling in, you might like wave and smile at them. But then after that, since you're not technically supposed to be sleeping in your vehicle there, you put up all of the shades and whatnot so it doesn't look like you're actually in the vehicle and hide out.
Jeez, the lifestyle. Right on. That sounds good. Well, let's do it today. We have another one of Joe's, I'll say, like-minded bros with us today, which is super awesome. This is a guy that I want to have on the podcast for probably about a year and a half. And that is our friend, Bob Thomas. Lots of you guys know Bob. He's one of the smartest guys that I've come across in our real estate investing world here. What's up, Bob, who's joining us from Portland today?
Hey, I am doing well. Thanks for having me.
Yeah. We can't wait to hear everything that you're up to today. Some big stuff, I think. A little bit of the big boy pond that we're going to be talking about today, guys. Bob Thomas, if you guys don't know Bob yet, Bob is a lender, developer, avid backpacker, and leader of, I say, the pack of his growing family down in Portland, Oregon. He is VP at Merchants Mortgage by day, and building his massive real estate empire through his personal holding company, or at least one of them, Sierra Financial. So, Bob, we can't wait to hear what you're up to today. Thanks for joining us.
This is going to be fun. Caveat right off the bat: you may hear a crying baby in the background. I just had a son a couple of months ago, and he is quite vocal. So I'm working from a home office trying to support Mama.
I was going to say to you, I heard you had got a really awesome Christmas present this last year. Tell us about that for 1 second before we kick off.
Yeah, had my first son on December 23rd, brought him home on Christmas Day, so a true Christmas present, and it has been limited sleep, but a bunch of fun, and really excited to kind of just see him develop so far and kind of see where his life takes him. So it's been really cool. I'm excited to be a dad.
What do they do for you when you bring a baby home on Christmas? Do they load you? Do they give you like an outfit that something different? Like a Santa suit or something like that. I know somebody else that had a Christmas baby, and they dressed them up in some, special little outfit or something special?
We brought our own little Christmas hat, but honestly, we were so ready to get out of the hospital. Like they could have offered to do anything for us, and we would have just run out the door. We just wanted to get home.
I hear that. Well, congratulations. It'll be interesting to talk to you like a year from now and see how that's changed how you operate, or if it has at all. But congratulations. Best part of life, man. That's what life's all about right there. So let's jump into it today. So Joe, kick us off.
Oh, yeah. So the first question, and one that I'm really interested in hearing about today, Bob, is we want to know your life story, essentially. We want to know where you grew up, how you grew up, and then how that got you to this crazy world of real estate. And if you want to, elaborate on all of your fun backpacking and school and all that stuff, we'd love to hear it.
Awesome. So I grew up in Chicago, Illinois, the lovely Midwest. Grew up there through high school, and I just got absolutely sick of the Midwestern winters. There's really nothing redeeming about the Midwestern winters because it's flat and it's just brutal cold, so you stay inside all winter. I love skiing and backpacking and getting outdoors, and you couldn't do that there. So I made the decision to head out to the West Coast for college. I went to San Diego State University. I just wanted to live on the beach, and my college selection criteria was literally San Diego to Santa Barbara and 15 miles in from the coast. So I applied to all the schools out there, and I was able to get in-state tuition at a Cal State school. So kind of drove me down to San Diego. Studied accounting. I got 2 degrees in accounting and a CPA. So it was a fun 5 years getting
accounting. How do you get I'm tracking with you, is that I wanted to go to San Diego State and I was an accounting major. My dad brainwashed me saying the WSU fight song to me since I could basically hear through my ears. And I ended up, of course, at Wazoo, but I swear I thought I was going to San Diego State when I was in high school until he must have sprinkled something into my orange juice and I ended up at Wazoo. So what's this 2 accounting degrees? What is that?
So it's a bachelor's and a master's. Really, it's not that exciting. My dad was the same way. So my dad was a CPA and the whole W-2 grind. And so he also kind of talked me into, I wanted to do real estate as my major. And he was like, look, you can always get into real estate, like go and get a base in business, the whole shebang. So, I took his advice. It wasn't what
is that you were interested in real estate even before then?
Oh yeah. I mean, I've been interested in real estate since, probably when I was like 11 or 12. Everyone I saw who had a lifestyle that I wanted to emulate, kind of like more of a free lifestyle, not really tied to a corporate job or anything, and fairly financially successful. I saw a lot often. What tied them together was a significant investment and holdings in real estate. So that intrigued me right off the bat. I did a couple real estate internships in college, was definitely focused on it, but because my major was accounting, I ended up kind of taking the accounting path all the way through. Got a bachelor's in just base accounting, master's in financial reporting, went to work for one of the big 4 accounting firms out of school, where I got my CPA, worked in audit. So there's like a whole career path there that you can take all the way up to partner, and they really push you to do that when you're in the accounting track in college. So I kind of went along that track until I was about 3 years in to public accounting, and I saw these partners, kind of where you would end up if you stayed for 10, 15 years, and they were making $500,000, $1 million bucks. If you're really good, but they didn't have time to use their money or spend it or have any fun with it. They were just working all the time. And so, after I saw that, I was like, look, this isn't what I wanted to get into initially. And the kind of end game here isn't where I want to end up with my life. So at that point I had moved, from San Diego to San Francisco. I was working on audits of tech companies and, a lot of mergers and acquisitions transactions for, kind of mid-sized and larger public companies. And I started looking for other work in the real estate field, and came across a job opportunity with CBRE, which is a larger commercial real estate firm, in their institutional office and industrial group. So brokers of Class A office properties and industrial properties in the Bay Area and larger Pacific Northwest. They were looking for like a good
learning spot right there. No doubt.
Yeah, I mean, it was definitely drinking. Basically, since I started my career, even at PwC, like it was just drinking out of a fire hose. You know, if you're, what I found is that you learn so much more by being, you know, kind of learning in a transactional based environment. You know, whether it's auditing and trying to get out, you know, quarterly, annual financial reports. I mean, you see on multiple clients, like you see so many different transactions and different, you know, kind of ways to view businesses and types of businesses. And the same thing getting into real estate. I mean, when you're doing, you know, large scale brokerage of these institutional type deals, I mean, you're seeing core deals, value add, core plus, opportunistic kind of deals. Like, I mean, we were doing a couple $2 billion a year in real estate transactions. So you really cut your teeth quickly.
Right. Love it. Love it.
Yeah.
Yeah. So you're at CBRE, and then what happens?
Yeah. So I was with CBRE for, I want to say, another 3-ish years. You know, started working my way, like you kind of start as an analyst working with like the brokerage team, and you start working your way up into more of a brokerage role, you know, working with clients, doing the whole brokerage kind of gig. But I always wanted to be more on the principal side of the business. So, you know, brokerage is a great learning opportunity to see how investors really value real estate, and how to look at a deal and analyze a deal. But I think what really kind of changed my perception was one deal we worked on. It was 2 office towers, like Class B office towers in San Jose. They were, I think, like 55 or 60% leased. I should have these numbers pulled up. I may botch these numbers, but like the general sizing is about correct. So it was 60% leased, 2 office towers. The seller just wanted to get out of the deal. The capital stack was just broken. We sold it to a value add investor. It was an operator out of the Bay Area. They partnered with, I want to say, MetLife as their capital partner. Acquired these buildings, and I think they acquired them for like $60 million, maybe $55 million. They put about 10 to 12 million of capital in it, both some renovation work and, you know, basically leasing the place back up. So tenant improvements, leasing commissions. So they were all in for, I want to say 70. They leased most of it to WeWork, a few other tech tenants. They got the rent roll fixed, and we're at like 95% occupancy, and they sold in 18 months to a core investor for $120 million. So they clipped like $50 million in 18 months, and we found the deal. We underwrote it, told them how to do it, and they just executed our business plan, and they went and made $50 million in 18 months. And I was like, hey, I'm on the wrong side of this transaction.
Yeah,
that's really what flipped my perception into wanting to really be on the principal side of the business as opposed to strictly focused on brokerage.
And so how did you make your way towards that goal? You know, so now you're like, oh man, what came next? What steps did you take to put that into motion?
Well, kind of like life happened. So my girlfriend at the time got a cool job opportunity up in Portland. And it had been kind of gnawing at me to want to make that change into more of the principal focused role. And I had already done some larger commercial real estate deals in Portland. So I had, a decent network built out. So the timing kind of worked. My, relationships and knowledge of the market worked. And so I said, yeah, let's go for it. I'll give it a shot, kind of being entrepreneurial up there. If I need to find a job, we'll find a job, but, want to be real estate focused and kind of just go for it. So I'd been to Portland maybe 3 times before, but we took a trip up, found a place to live. She started working her job in corporate strategy for a larger craft beer company. And I basically made my job to be a professional networker, just go out and meet everyone I could in Portland. Let them know that, I have capital resources. I'm looking to buy, value add deals. Doesn't really matter the size, just, more focused on yield. And I'm here to play, so let's do some deals.
And question for you at that time. So you're out there, you're doing your own thing, right? You just move up there, you're networking, you're basically acting as if. What were your capital resources at the time that or did you feel like you had enough relationships that you'd go figure it out if you could get an opportunity?
Yeah, well, so, I think coming from that larger institutional real estate background, you see how these people structure deals. So like, it's always been interesting because people, come to me and they ask me, hey, like, how do I break into commercial real estate? How do I move from single family to commercial? And I always tell them, I don't know the answer because I started the other way. So, in my world, we would find joint venture partners for people to, capitalize deals. We would be kind of full stack capital markets. So we would source the senior debt, we would source mezz debt if needed, kind of JV equity, and, bring the operator in. So that was like how I viewed a capital stack. And so, I had some capital connections from the Bay Area where, they were looking for deals to buy and looking for an operating partner. And so, I was like, hey, I'll be that operating partner. Let's go and conquer.
And so did they ever, when you got started doing that, did you have a hard time in the fact that you'd actually never been the operating partner? I mean, what is the definition of operating partner? That means that, you're going to go find the deal and, put it together, bring all the players together, and then actually operate and execute the plan? Or were you hiring, teams to handle the execution of the plan, like a property management company and leasing, or were you going to be doing that all yourself?
So it started out where, you kind of, if what I've found is that if you have to take the time to put all of the pieces together before, if you see a good deal and then you say, all right, well, I need to find this and that, and that, and that, and that, and that, and that before writing an offer and getting it under contract, like the deal goes to someone else. Right. So starting out, I knew what a good deal looked like. I knew that I had capital partners that I could draw on if I had a good deal. And I kind of figured I'd figure the rest out. With that being said, I also, when I said, hey, I want to go and be entrepreneurial, I've got this shop, and that's Sierra Financial is kind of the main holding company. I've got Ridge Capital as more of the day-to-day operations company. But what those two companies are basically a debt and equity brokerage and an investment management / development shop. So, it's kind of like a full service investment brokerage, and it has a property, like I own a licensed property management company. I'm a real estate broker. I do the lending, and I do development and value add investment projects. So
you're twin brothers with Adrian Chu. You're twin. Actually, I think do you know Adrian?
Yeah, I do know Adrian.
Yeah, you guys do different deals,
yeah.
I think. But yes, but that's awesome. This is why, guys, we're having Bob on today, because this guy is badass. This is how you do it, and so far I'd say the biggest takeaway that I want to say is I love that you were where you started out, gave you the knowledge, the real life streets knowledge of where you went to work at CBRE or some of these other places beforehand. And you got on the job training of what it looks like. There's so many young people out there, younger guys and gals out there trying to get started today. That actually doesn't matter what age you are. That is such a good place to go learn. It is just go into the commercial real estate business and work somewhere for a while at whatever asset class or whatever you want to do, whether that's retail or office or these, multifamily or whatever, and go learn for a few years exactly what he's talking about and watch it all go down and happen and how all these things get structured. That's such a huge, invaluable. I mean, you can't, you don't just switch a dial over and say, I'm going to go start doing that. Like you said,
I mean, that's your background too, right, Julie? I mean,
that is also absolutely
larger, yeah.
When you were describing that deal where you watched those investors, go buy that value add building in San Jose and then, upgrade it and pump the rents and stabilize it and sell it. I lived through that personally as a deal myself. I mean, it's absolutely amazing. We had a portfolio of properties in Pioneer Square, did the exact same thing, except I was on the ownership principal side and operated and, from the asset manager on the ownership side, had the exact same experience. And I'll say that just that one transaction of that portfolio allowed me to essentially pay cash for my house, which is insane. Just the amount of, and I just had like a 10% piece, but it was insane. And once you get involved in that, it's very hard to understand flipping and all that other stuff. I get it, right? But sort of I don't, if you guys have to understand that you don't have to start in flipping and work your way up to something like this. You could jump straight into this. And I got my education along the same routes as Bob. He got to go to San Diego State and I didn't. Go Cougs, right? But I was also an accounting major. And my path was I ended up going and working in the accounting department of a big national property management firm. And then I kind of stuck out like a sore thumb and I got handpicked by the CEO to go work for basically the founder of the company in his personal holding company. And then from there, my story is the same as Bob's in that way, right? Bob is a lot younger than me. He just had a baby. How old? Couple months old.
Two months old as of a couple days ago.
And my girls are now 11 and, shifted my life due to that once they were born. And the rest is history. But yeah, it is very, very exciting pond to play in for sure. So keep talking to us. So you get out there and you're networking in Portland. How did you find your?
Well, hold on just a sec. I think that elaborating a little bit more on what you said, and just I want to piggyback on that. Like, I totally agree with you that like it is not an issue to get a W. Like, people have this aversion. People in our industry, who want to be entrepreneurs and everything, have this aversion from like W-2 jobs. And I agree that if you're doing a W-2 job you hate, like, get out of it. But if you're doing a W-2 job in order to help bolster your skill set to then make you a better entrepreneur, like, you should dive in and do that. And like, the amount of, like I said, when you're in a transactional based environment where like you are just seeing deal after deal, week after week, you get so much experience in so little time that it is invaluable. I mean, I think between PwC and CBRE, like I was there, it was probably 6 years, and I probably got like 20 years of experience if I had not been in a transactional based environment. So like, just seeing all those deals run through on a large scale was just huge for me. And so, like, for people who are looking to get into this, I mean, go look for jobs at Colliers, JLL, CBRE. If you're like, people don't know this company, but Eastil Secured is like the biggest real estate brokerage in the world. There's like Eastil, EASTDIL Secured. They're like a 400 person shop globally. And they're like the Goldman Sachs of real estate. So I have a buddy over there. We worked at CBRE together. Then he went to Eastil. He did $10 billion of debt placement last year. Like, these are the guys they have captive clients like Blackstone, and they, like, every deal Blackstone does, they bring to Eastil to sell and do the debt on and everything else. So
understanding the debt side, not just that, is key to the whole thing. Understanding the debt side and the underwriting side of these deals is, in my opinion, more important or as important as knowing how to operate these things. That is how you put deals together, is by understanding, the debt side. That's
I'd say that kind of full capital stack, right? Like, so you want to understand. Yes, I mean, placing senior debt is great. Maybe I've been in it long enough now, but that'll get you 65 to 75% of the way there on a capital stack. But then having the ability to find mezzanine financing or creative joint venture structuring, that when you're able to put together a full capital stack, then your only issue is going out and finding a deal.
Tell us what for those listening and learning today, tell us what the definition of a full capital stack. What do you mean by that so people fully understand?
Yeah. So like let's just say we're going to buy $1 million piece of property, like $1 million house we're going to flip or something like that. So I do hard money lending, right? So we will lend 90% of the cost of a project to do it. So just say you're going to buy a $1 million house, I would lend you $900,000. Like your capital stack is the whole million you need. So you could go to a lender and get 90% of it, and if you were doing like a residential flip on it, and get $900,000 from the lender. But then you got to figure out that other $100,000. Well, what if you're strapped for cash and you don't have the other $100,000? Well, you can go and you can find a second position lender, a quote unquote a mezzanine lender, to give you a majority of that cash. You could partner with someone and give them a piece of the upside on the project to give you the money to do it. So that's on a small scale. If you start taking it to a larger scale, the $50 million deal, $100 million deal, the same principle applies. It's just if you're one person, like you're much more easily able to squeeze yourself into a large dollar amount of a deal without like really squeezing other participants down from a percentage basis. So that's why going into big deals, from what I've seen, makes a lot more sense because there's a similar amount of players, but the dollars are just bigger. So if you're just an operating partner, you're not bringing in much cash, you can still get this huge promoted return that ends up being a substantial amount of money instead of doing a flip where your promoted return ends up being like $30,000 or $50,000. Which is still a good amount of money.
For us a little bit. So what does that mean when you're the operating partner for what you just described there, so people understand the distinction of what you just said?
Yeah. So let's just continue with that example, right? So you have $1 million piece of property. You get $900,000 from Merchant's Mortgage to lend you that money. You need the other $100,000, and you're not going to put in a dime of it because you're going to operate the deal. You're going to run the contractors. You found the deal XYZ. So you get a partner to bring in the other $100,000. You say, hey, buddy, we'll split the upside 50-50. So you put in nothing. You run this deal, and then you sell it for $1.5 million. So there's $500,000 in profit. You're going to get $250,000, and your other buddy's going to, the guy who brought in the money is going to get $250,000. He made, he put in 100, made $250,000. He got a 2.5x on his money. Like, that's great. You put in nothing, and you just made $250,000. Like, that is the definition of an infinite return. So that's why I like to be, kind of on the general partnership, operating partner kind of side of things, because at the end of the day, everyone else is effectively, a debt instrument to you. Like, they keep levering your position to the point where you can get to returns that are, if you run like an IRR, an internal rate of return analysis on your dollars invested to dollars out as a general partner, like I've done deals where I've gotten like a 3 million IRR on a deal before. And that's just because you're basically using other people's money to get the job done.
Exactly. That's actually how I've made all my, I'll say, wealth, is that exact same example, except for I was I'll call it asset manager on the ownership side. And, basically for operating the deal from the partnership higher level stuff, I got, anywhere from, we'll say 10 to 20% or 17, keeping under that 20% of the deal, just for being an expert operator. And that went from, anything from value add apartments to, value add, of retail or office or condo conversions and all that stuff. So, that's another route to go, right? Is going to work and working for, learning I'll say the execution side, right? Of the business. So you can bring that value if you can find somebody to, I don't know. Do you find that it's, so you're able to make those, deals like that because you're out finding the deal, right? The way I did it is I went and worked for somebody myself that, had deals raining on them constantly. And I basically went and worked for a salary for about 8 years. And then the other 8 years, I owned everything that I managed because I brought such value, became an expert operator, right? Not day-to-day property management, but asset management from, a bigger overview, managing the property management company, I guess I'll say, from the ownership perspective. So there's a couple ways to go about that. I'd say that Bob's way is going to be the most lucrative because you can get a bigger piece of the pie when you're finding the deal, right? Versus working for.
I think what I was able to do, I think having that operational kind of finance and execution background is critical. If you don't have that, you're missing a significant piece of being able to, kind of be that quote unquote operating partner. And so I don't have, true asset management experience with a larger company, but I think working, as a CPA and with large public companies, seeing how they operate and, auditing their financials and their operations, I think that it helped bolster my knowledge on that side of things. So if I didn't have that, I don't think I'd be as effective running my business today as I am.
Hey guys, it's Julie here with a quick break from the show to discuss an opportunity some of you may have interest in, which is to work more closely with me. On almost a daily basis, I get calls from investors and brokers, both new and experienced, asking me for guidance or advice. I love helping you guys out, and it keeps me on my toes too. So with that said, I wanted to let you know that I have a private broker coaching community called the VIP Education Community. And the best part is that it's 100% free. That's right, it's free to join. So whether you're a traditional broker or a broker investor, my VIP education community offers personalized one-on-one coaching from not just me, but also from my experienced broker friends with expertise in all disciplines of real estate and real estate investing. We'll teach and share our modern marketing strategies, our tech and lead generation resources, plus teach you how to identify or offer up opportunities for yourself or for your clients using techniques such as seller financing, lease options, land entitlement deals, BRRRR investing, flipping, multifamily or commercial coaching, whatever you like. We've got it all covered for you. The future of real estate is changing fast, and to stay in the game, it's time to learn about all the options you can offer your buyer and seller clients, as well as, if you want, learn how to use those skills to grow your own real estate portfolio. If you'd like more details about joining my VIP education community, reach out to me at julie@seattleinvestorsclub.com or text me at 206-910-2985 or just send me a Facebook message. My new favorite phrase is community equals confidence. So let's navigate the future of real estate together. Now, back to the show. Awesome. Good stuff. So tell us about your first deal. How'd you find it? What was it?
So the first deal we did in Portland, I had been networking. I had met a developer buddy of mine who we're now business partners on a bunch of different projects. He had already purchased a large multifamily development site about 2 years before I met him, and he was working his way through entitlements. I was, looking to get involved with deals however I could. And so, we were he was just about ready to raise equity for then take out a construction loan and get the project started. And I said, hey, let me bring in the equity. He said, okay, get it done. So, it was a 100-unit apartment site. It was a $19 million total cost of the project. And we needed to raise about we had a very highly leveraged loan situation with some senior and mezz debt in there. So we needed to raise about 10 to 12% of the stack as true equity. So I basically went out and did a Reg D raise. We, put a PPM together, used some lawyer down in San Francisco and paid way too much money to get the PPM put together. And then just went on a fundraising spree. And basically, I thought it was a good project. And so I just hit up kind of my high net worth network, hit up some family and friends, some former clients down in San Francisco, and we raised a couple $1 million, and built the project over the next 2 years. Recently bought out the equity that we raised, and sold that project into an opportunity zone fund.
Wow. Congrats.
Thank you. Yeah. So it was a wild ride. I mean, it went 6 to 8 months over what we had projected from a timing perspective, right on time.
Yeah.
And, there were a lot of headaches with permitting with the city. They wouldn't give us a new permit for 9 months because of, they didn't like how our elevator vestibule sat on the top of the building. And they didn't like the door swing. It was crazy what the city of Portland, I mean, everyone complains about their cities and permitting and how much of a headache it is. Portland is just like that. And I would say, as bad, if not worse than what everyone else is talking about. But yeah, so we sold it into an opportunity zone fund that we are managing. And we're currently, we've raised half the fund and we're currently raising the other half. We weren't able to stay in as owners of the asset because of the opportunity zone rules and how we'd started construction before opportunity zones became a thing. So you can't retain ownership in an asset while converting it to an opportunity zone asset. So
why did you guys
we got around that by
sell that one?
Say that again.
Why did you guys decide to sell that one?
Oh, because it's more valuable as an opportunity zone asset. So we sold it into the opportunity zone fund that owns the building. And then I'm actually, I don't own the land, but my partner owns the land on a lease option. So he's riding along with the opportunity zone asset as a leasehold interest or as a lessor of the land. And then we're going to be managing the fund and hold it basically for for the full depreciation cycle is what we're going for. So 27 years, there's no load on the fund because the sponsor gets their interest through the land component.
Wow. I mean, you didn't know about this when you got started, so you got blessed by opportunity zones.
Oh my God. Yeah. It's way better to be lucky than smart sometimes. We funded the construction equity in August of 2017, and the Tax Cuts and Jobs Act, came into effect in 2018. Right. So yeah, I mean, we've been learning opportunity zones kind of on the fly, as it's been going, but we've got it fully set up, and the opportunities, there's a few different components of that deal, but the opportunity zone benefits combined with some different revenue models that we've put in place, and then the depreciation benefits you can get from the new Tax Cuts and Jobs Act, like all those combined, just make it an absolutely killer deal. For example, as a market rate building, it was valued at like $28 million. As a opportunity zone deal, it was valued, and we had an appraisal at $30.5 million. And then as an opportunity zone deal with that new revenue model, it was valued at $35 million. So just because of a few changes, we bumped it from like 27.5 to $35 million value.
Whoa. What is that? I mean, we should actually, that's a whole nother podcast, man. We need to have you come back and we need to do a deep dive on opportunity zones and stuff like that. I know, that you guys are, I don't know if you're focused on that today, or maybe I'll ask you what kind of deals you're looking for these days for your own portfolio. Are you, riding the wave of the opportunity zone thing? Because it's only, it only is good until what, 2026 or 4 or something like this, or?
Yeah, I believe it's 2026. But that's just when you can get into a deal. Then you can hold it through 2047. Okay. And then your basis automatically gets reset to market. We should do a whole nother thing on opportunity zones, because I feel like a lot of people, what I hear is people say, oh yeah, opportunity zones are great, but that's just kind of an ancillary benefit. And I completely disagree. So anyway, when you ask me what I'm looking for, like, yes, I'm looking for opportunity zone development projects, good development projects outside of the opportunity zone. I'm actually closing with a partner on a 30-unit multifamily development site today. I've got to go and sign it too. so I do some market rate non-opportunities on development projects as well, and then also I'm trying to switch my focus away from kind of these risk on ground up projects and build my portfolio of more of kind of value add multifamily. So actively looking for.
I was going to ask you, are you looking for value add multifamily of existing buildings that just has a upside to operations and higher rents and some value add remodeling, or are you only looking for stuff where you can add additional square footage or development piece to it?
No, I mean, I as long as it has a value add component, I'll take a look at it. And what's funny is that I think it goes back to your cost of capital. So when I was first starting out, my equity was expensive. I mean, my partners who I were bringing in, they demanded a large return because I didn't have a proven background and everything. Well, I've been able to find investors that have lower capital requirements, and so that allows me to go out and take on less risky deals. Because if I can give my equity investors less, I can still kind of retain the same amount of profit that I would have on a larger deal, while taking less risk on the overall project. So yes, since I've found some more patient, kind of long-term oriented investors, I've been very actively trying to seek out, call it $5 to $30 million value add multifamily projects. We were chasing 4 or 5 last year. I've got LOIs out on a property in just west of Portland and Beaverton right now. It's like 45 units. Short answer, yes, definitely looking for value add projects.
And let me ask you, for somebody that's wanting to follow in your footsteps or look at you as a mentor for their own, growth in this real estate business, what's the lesson there when you're getting started? Is the lesson like, hey, you got to be willing to, like you said, if you don't have the portfolio under your belt yet, it's going to cost you more money when you get started. What's the reality is of people who are getting started down, wanting to pursue a similar path to you took, to keep it simple? What should let's put their expectations in line of what they should be able to achieve on their first few deals in regards to, giving away or keeping part of the deal for themselves, or what type of, rates they might have to pay on their, equity they have to raise and so forth. Can you give them a little insight? I mean, I think people, don't realize that, sometimes you're going to do stuff just to get some stuff under your belt as well a little bit.
Yeah. I mean, I think that is a huge thing. A lot of people try to look at real estate deals as like a one and done. And I think if you're that deal focused, and you're just starting out, you're going to be missing a lot of opportunities to build your resume and kind of slowly build capital. My buddy, basically, he tries to hit singles. He's like, hey, if I hit 4 singles, I get home, and it was probably less risky to hit those singles instead of just trying to, knock it out of the park. I'll stop with the baseball analogy. But yes, I totally agree that the first few deals I did, I mean, I didn't, so the first deal I did with that 100-unit project, like, yeah, that crushed it. That was a really good deal. Investors made money. I made money. It was great. But like, I did a couple of house flips where I also did kind of a JV structuring approach, just because I wanted to do a couple house flips, kind of get going with some new capital partners. And I gave my partners probably 90% of the upside on those deals. I didn't make much money on a couple of the house flips I did, but I got my investors comfortable in my ability to execute. And since then, we've purchased some, a perfect example. Like I flipped a house with a guy. I made him like, I don't know, 40 grand. I made like 15. And since then we went and bought a 9-unit apartment complex with development potential for another 50 units on the site, that I was able to negotiate in some cool promoted interests in. And then we bought another development project down in Eugene, Oregon, similar kind of scope. So, I think building your investors' confidence in you, and not necessarily trying to squeeze all the juice out of every deal, but making sure that everyone is happy with your performance and their return is much more important when you're first getting started.
And are you primarily interested in multifamily, or are you do buy any other asset classes?
I'm looking at a value add office deal in Portland right now. My background's in office and industrial. So I find multifamily was really hot this cycle. It's relatively simple to underwrite and execute as opposed to an office deal. I also kind of like kind of non-standard asset classes like self-storage and RV parks. The depreciation side of our RV parks makes them super attractive right now. I don't have an eye for retail. I wish I did. That would have been something that if I had worked on institutional retail at CBRE, I'd feel much more comfortable with it. But that's one asset class that I just don't really want to touch. I just don't understand it. But yeah, office, industrial, mobile home parks, and multifamily are kind of the asset classes that I'm interested in pursuing and actively pursuing.
In what circumstances when you're buying these deals, are you able to close right away versus you want to close, I'll say, on developer terms? Do you feel like, obviously when I say that, I mean like close on permits. Obviously with just the value add multifamily, you're going to just close. But when there's a development piece involved, how often are you trying to close on permits versus just closing as soon as you can get done?
Well, so to go back to the multifamily side, sometimes I know that there's capital out there, but I don't have it raised. And so, you need a little bit of time to raise it. So I think one of the scary deals that I did last year, we didn't end up closing. The seller got crazy and backed out of the deal. But, I put a no financing contingency, 15-day due diligence, and then a 30-day close on like a 50-unit apartment complex. So it was just a really good deal, and I knew I could get it done. But the scramble to get your appraisal, I hit my bank lender up and I said, we need an appraiser out there tomorrow. I need the appraisal back in 2 weeks, inside of my due diligence period. And then I was frantically trying to raise equity on the project. It's nice to, even on those value add deals, give yourself a little leeway to actually raise the capital if you don't have it, kind of at your beck and call.
And how much time do you think that takes? I mean, for you, you got those relationships, but, for somebody else that comes across a great deal, actually, if anybody out there is listening that comes across what they think is a great deal, and maybe we can have Bob come up and talk to us as well. I know you've done some stuff with Wari, some classes with Jan and stuff like that. But, you guys who are interested in doing this, the best thing you could ever do is just work with somebody that's already knows what they're doing and learn from them. So, talk to Bob. I am sure Bob would love to hear if anybody thinks they've got a deal of opportunity. What size deals, or what's the smallest size deal you want to look at, and which states are we talking? Because we have people listening.
Look, I'm a self-professed deal junkie. And this is why I like doing the debt origination on. I do a lot of single family flip debt origination with Merchants Mortgage, and I love it because I'm able to talk to my clients and really kind of figure out how to best structure a loan or help them structure the rest of their capital stack. So I just like talking deals. It kind of gets me excited. If I was to be trying to JV on a deal, I think it really depends on the overall look at the deal. I'm definitely looking more to hold properties right now than sell them. And I would say depending on what the other partners bringing in would determine the size. But if we're going to be holding like a 20-unit plus apartment complex, I'd be interested in looking at it.
Excellent. And so speaking of I'll call it your day job for lack of a better word, tell us about Merchants Mortgage, why you decided to join and work with Merchants Mortgage, and what you guys do over there, and how that works into your world for your own, business model. Tell us all your companies actually and what they do and what your business model, how that all works together. Because Merchants Mortgage we want to hear about for sure.
So remember when I said that I got to Portland and I just kind of made myself into a professional networker? so at the same time, I saw a job opportunity that was it was posted on, I want to say like Indeed, for Merchants Mortgage. And they basically said, hey, go out and originate debt and talk to developers and basically place value add development debt. And I was like, well, I'm already going out and meeting all these people anyway. This would be not only a great product to offer the people I'm potentially meeting with, but kind of a way to get paid to network with developers and continue to grow my network. So it's kind of gone hand in hand where I was able to continue to focus on what I wanted to do while just kind of adding to that that kind of overall capital markets expertise and availability to deliver capital either to clients or on deals that I'm doing. Like I've got some debt out with merchants right now and a couple of fourplexes I just bought with a partner, and we just paid off another flip loan on a deal that we just closed. So I'm actively using merchants debt as well as going out and helping other people with their projects with merchants. So it's been a great resource and an ability to help kind of continue to grow my network with them. Other companies I'm a part of. So my Ridge Capital is kind of my holding company of all my operating companies. And then Sierra is kind of my holding company for all of my actual projects. But Ridge owns, until recently, we had a construction company. I just kind of exited out of that. I'm fine paying GCs instead of running my own construction company. But we have a property management company under there, a real estate brokerage company, and then until recently, we had the general contracting company. And so those are the companies we have, and that plus merchants, with the brokerage and the debt, and the ability to manage projects, just kind of create a full service shop when I go out and raise money and say, hey, look, we've got a deal. We have the ability and the track record of executing this successfully. Like, let's go and do another project.
Awesome. And what states are you investing in?
So right now I'm very Oregon heavy, and I'm trying to, one of my goals for 2020 is to get more geographically diverse in my investments. But right now, Portland is my primary market for all my development projects. And then I have a holding down in Eugene. And I am actively looking in Portland, Dallas-Fort Worth, Atlanta, Raleigh-Durham, and Tucson. Those are kind of the 5 markets I'm looking at right now.
Good stuff. Awesome stuff. Man, you are a busy guy, my friend, with a newborn baby as it goes. So do you, as far as we are friends with, for example, Spartan Investment Group, right? I myself invest with Spartan, right? Looking for multifamily type of syndications myself, even to invest in, just because I think I thought when I was younger that when I left what I was doing, that I would transition over into, syndication and multifamily, kind of along the lines of what you're doing. But my kids were born. I had twins right when I made that transition, and I decided to not do that, which is good for me. I like my life the way that is, but I am always looking to invest with my smartest friends. So are there opportunities for anybody listening today to invest in any of your deals? And if so, how would they go about finding out that information? Or do you just have your, go-tos that you can raise your capital super quick and you already do business with them? How does that work for you?
Yes, so I've typically done Reg D 506B filings, which means that they're not publicly available. 506C is when they're publicly available, and then you have to vet the investors and actually make sure that they're accredited, and kind of it puts a little more risk on the sponsor. But with that being said, yes, I mean I'm actively I'm always looking at new deals, and would love to kind of bring at least have conversations with people about what their investing goals are and kind of develop that relationship up front. So when there is a deal that comes across my desk that makes sense for that particular person, we can chat about it and see if it's a fit. So I think the easiest way to start that relationship would be either get on a phone call or just have a cup of coffee, meet a couple times to just get a better sense of each other. Maybe go over some prior projects and just kind of develop that relationship. I think what's the worst thing you can do is put the wrong investor put a great investor into the wrong deal or something that doesn't fit with their strategy, either from a timing perspective or risk perspective, right? I mean, like that's where unhappy investors and lawsuits and everything else comes from. If you have an investor who knows all the risks up front and is comfortable doing it, even if they lose, right? They went into it eyes wide open and they knew what was going on. But like you want to have that comfort level with your investor base. So like Julie, I'd love to talk with you. Like we've developed a relationship over a couple of years. Like I'd love to talk to you about some deals I'm working on. For kind of new people, like I usually like to take it slower and see really what their true kind of investing goals are before we get into a project.
Absolutely. So out of all these years of all these, deals that you're getting involved in, what would be like the top one or two lessons that you've learned through that process? And then my second question before we wrap it up is, who's been your top mentors to get you where you are today? Or is it more so that you put in the time, like you said, when you were getting started and you landed in the right type of W-2 situation to, learn on the job transactionally, like we talked about? Or is it more been certain mentors that you have pushed, that have pushed you in a certain direction? I don't know. Are you active with Greg Pinio?
I'm not like, I would say I'm in the orbit of that Pinio group. I'm not like super active in it. It's mostly been, like a lifestyle change with my kid and everything. That's a great group of people. And I did the power players thing. And I mean, so let me go back and answer your question, on some of the bigger kind of learning lessons that I've had. One is that deal size doesn't matter. And to me, I think bigger is better. Like I'm looking at an opportunity zone deal that's a downtown block in Portland right now. And it's going to be like $10 million to buy it, maybe a little bit less. And then, probably a $50 or $80 million development project. Like that would scare a lot of people. To me, all I see is, man, I could own an office tower in downtown Portland in 5 years. Like, I think that's cool. And so,
but let me ask you, that is, I totally, that's why we're talking to you, because you are that guy. What part of your background gives you that confidence, right? To just look at it as essentially, a deal and not all the zeros and stuff. The most important part of your background that got you the ability to have that confidence came from where, do you think?
Yes, it's when I was at CBRE. I mean, we sold $500 million office buildings in downtown San Francisco. So it's just, when you have that vivid experience and you see that, hey, people are doing it, then, you can always shy away from it, but it's real and achievable. And then it's just, well, shit, if they did it, how do I do it?
Right. And it's just a bunch of numbers, right? At that point.
Yeah.
I agree.
Yeah,
I agree.
That's one thing that I don't think deal size matters. And I actually like bigger deals as long as, the risk profile relative to returns makes sense. I think the other thing, and I learned this from the Greg Pinio crew, coming from institutional commercial real estate, there isn't a lot of creative deal structuring. Like what happens with creative deal structuring is more on how equity is structured. But Greg really pushes like seller financing and creative seller notes, substitution of collateral, subordination, things like that. And for people in, I kind of went from a institutional level down to more of a mid-market kind of level of investing, where you're able to draw on those institutional, numbers and background, but, you're also still working with some private sellers who are willing to do seller finance notes and then potentially subordinate to construction debt and do things like that. So, I would say another really powerful thing I learned was from Pinio and power players and kind of putting both the institutional side as well as the creative residential side together. And it's a really powerful combination when you put those two together.
Absolutely. So are you saying that, kind of like deals up to a certain mid-level size, dealing with certain more, I don't want to use, I'll just say lack of a better word, mom and pop type stuff allows you to use some of those more creative seller financing or substitution of collateral clauses and things like that, versus playing in the big pond where, like in my previous life, I realized once I was out of there, and once I left and had my kids and so forth, that I actually did not know anything about creative real estate financing because it was all so institutional. There was no creativity going on. And I only learned that later when I started, looking at, this investor world that we're living in here, where I'm in today. But I agree that there is not a lot of people seem to be able to put the two together. One of my favorite people to talk to, of course, is Brian Blessing, who I know Brian and Katrina are very smart. Yeah. So all good stuff, guys. We definitely need to have Bob come back and break it down for us on the opportunity zones to get a better understanding of what it is that he's looking for today and why. Today we more so wanted to get to know you a little bit better so we could have the opportunity to get everybody excited and invite you back. Are you doing any more types of development classes? Or I think you did something with Jan, like a development basics. Are you doing anything or any events that people can attend just to be educated?
I haven't done anything in maybe 6 or 8 months. I'm definitely open to it. And like I said, I'm just a deal junkie. Like I love talking about deals. I love, helping people learn and kind of structure their own, that's my background is knowing, kind of generally how to do it and a framework that you can, kind of fit the pieces into. And so I love to help out if there, if anyone has questions or if, we wanted to put something on, like I'm open to it.
Cool. Well, maybe I might get with
I had
him
the kid,
and a joint. I'd love to do a joint thing with Jan and Wari between Seattle Investors Club and talk about this topic in more detail. I love talking about these topics with the people that we know that are actually out there doing it, that are actually already part of our group rather than bringing somebody in from the outside. It just makes it more fun and personal and, seems more achievable when you're hearing it from somebody, within your own world that you can, get good contact with.
Well, I got to say on the opportunity zone side, I think we were one of the first operating opportunity zone projects because typically opportunity zone deals have a 2-year at least time horizon because you have to substantially improve the asset in most cases. So you have to do a development project and then stabilize. But with what we did, we were already mid construction when the opportunity zone stuff came into effect. So, we've kind of been we've been paying a lot of lawyers a lot of money to tell us, what to do, but we're kind of at the cutting edge of all the structuring behind it and adding on, how bonus depreciation and cost seg and everything works in concert with opportunity zones and everything else. We're like a lot of the lawyers we talk to have to consult with other lawyers because no one really knows all the ins and outs yet. So it's been fun to kind of be, in that gray area. Yeah.
Yeah. Maybe we can have you back on and break it all down on that particular building or whatever you want to talk about, because I know it's going to be below the mind of a lot of people here in regards to, I always wonder, like, how does this relate to the average investor though? As far as, the people that are listening, unless they're going to be a developer or invest in one of these projects, maybe they're going to be taught how to source these deals, right? How do you think that subject matter touches people other than people like yourself? What would be the benefit? I'm just talking out loud for that people would learn. They would learn to invest in them, look for those opportunities, or what?
Well, that's an interesting and loaded question because opportunity zones are kind of Roth IRAs for either developers or like ultra high net worth people who have a bunch of capital gain, because you need to invest capital gains. So you need to have created, and you have to have an investment previously that you sold to create a capital gain to then invest in these things, or else it doesn't work. So, that's kind of limiting right there. So yes, I would say either, people who are interested in doing the development side of it and raising the fund, or sourcing those deals, that's probably the easiest way to get in unless you have access to cap gains.
Well, that's it right there. I think that's an interesting piece right there, right? Like, for example, I have an apartment building and hope to God we never sell it because my tax bill is, well over $500,000 so far. If that were to happen, we can't sell it. But would I be able to exchange into a project like that with my?
Yep. It wouldn't be an exchange. Yeah. But you would be able to just put your capital gains into there, and then you could take your originally invested capital and go and play in another sandbox. But you do pay taxes on your gain. You would just pay it at a future date, like 6 years down the line, and you get a discount on that tax. But then so that's like the Roth IRA piece, right? Like Roth IRAs, you pay the tax up front, and then your long-term upside is tax-free. Same thing here. You would eventually pay the tax up front, but you would get beneficial treatment on it. And then your long-term gains on that next project, if you do it right, are tax-free. There
you go. Yeah, breaking that down, because we want to talk to people. We want to talk to the right audience, right? So maybe you and I or me, you and Jan, we could talk about let's get the right audience together for this topic. Of course, you guys are all welcome to join in, but want to make sure that we're providing value to everybody. And I can't wait. I know I'm very interested myself, so it's going to happen, but God, we appreciate it so much today. One last question for you. And that is in regards to nothing to do with real estate, which is, what is a climb or mountaineering trip that you haven't done yet that you want to do?
So I'm midway through the California 14ers. So the 14,000 foot mountains, they're the highest mountains in the continental U.S., the lower 48. There's 14 of them in California. And one of my goals is to get through them all. I've done like 6. And my last trip I went on, I was supposed to tag 5 of them off on one trip in one kind of circ. And my climbing partner got injured, so we had to evacuate her down the mountain. So, I want to do the Thunderbolt Sill Traverse, which is in the Eastern Sierra, and then kind of knock off the rest of the California 14ers.
Wow. So, are you always going in a group or at least one other person, or what's that look like? I thought I saw something out there that you were out there solo or something.
It depends. So I'm going to be down in the Sierra in August, and I might do White Mountain, which is like the easiest 14er to do. It's just basically a path to the summit. So I might do that solo, but typically I've been doing more technical rock climbing routes, like alpine trad climbing, and so you're using cams and nuts and everything and all the ropes. So you typically have a climbing partner you go with. I wouldn't really do a free solo route up an alpine trad route. That would be, especially with the newborn son, that would not be the smartest idea.
Right on. How did you get into the climbing and mountaineering? What's the story on that?
Yeah. I've been doing it for a while. I was climbing when I was early teens. Never really stopped. And then my brother actually got into it much more than I did. He was like a ski bum climbing guy down in Peru for a while. And so we get together every year and we do like a big either ski mountaineering or kind of mountaineering adventure. So we've been slowly working our way through a lot of mountains in the U.S. because of that.
Look at that, guys. Not only is he as smart as hell, he's a risk taker in every aspect of his life. Very calculated. Awesome stuff, Bob. Well, I, for one, would love to just come and sit with you personally. Maybe I'm coming down to Portland in March. I'll give you a shout if you're around.
Please do. Please do.
Grab a cup of coffee or something like that. But thanks so much for coming on today, guys. There's just so much to tackle with Bob. I feel like we just got to know him today. That's all, guys. As you can see, why I'm excited to talk to Bob and why we're going to be excited to have him on repeatedly in the future, or maybe we're going to team up with Wari or somebody and try and do an event for you guys. I would love to do that. So Jan, if you're listening, give me a shout. But other than that, we'll let you get back to managing your empire there, and let Joe get back to the slopes. And Joe, where can everybody find the details of today's podcast?
Yeah, guys, you can find everything at the seattleinvestorsclub.com/106. That's seattleinvestorsclub.com/106. And if you like this podcast and want to hear more of them every single week, make sure you hit this subscribe button And if you like it even more than that, give us a review. We love to get reviews, and it helps us to get our message out to more people.
Hey guys, I'm going to top it off here with a little admin. Bob, if you're still there, are you planning to come up this summer to the Pacific Northwest Big Badass Real Estate Conference, or are you going to be off climbing some mountains? It's July 10th through
No, I will be up there with my two other Merchants Mortgage employees in the Northwest. So we'll be having a table there, and yeah, I'll definitely be around.
Absolutely fantastic. So everybody, if you have not heard yet, if you have not bought your ticket yet, I'm telling you, the event of the year for Pacific Northwest Real Estate is coming up this July, the 10th through the 12th. And that is the Pacific Northwest Big Badass Real Estate Wealth Expo. And that is hosted by our friends at Fixated on Real Estate, Fixated Real Estate, Tarl Yarber, Grace Yarber, and their team. It is the event of the year in the Pacific Northwest for real estate and real estate investing. We're all going to be there. We hope to see you guys there. Just look it up online or Google it. Use the Googler and you will run into all the information. The ticket prices, I think, are going up March 19th. So now's the time to buy your tickets ahead of time. There's going to be probably over 750 people there. I don't know, 75 different, vendor type booths, 40 different presentations, really, really information packed weekend. And you can find all the event information online by looking up Pacific Northwest Big Badass Real Estate Expo. As you can see, I haven't drank my wine yet today, so I can still say that. For those of you, in the meantime, come join us at one of our weekly Seattle Investors Club's meetups, where we talk about all kinds of subject matters, including opportunity zones, multifamily investing, pretty much anything goes. Anything you're interested in, any questions that you have, any deals that you need help on, great networking, education, collaboration, and great lunch or breakfast. Come join us. Look on Seattle Investors Club meetup site if you would engage with us through there and join our meetup group there. We would appreciate it. It's the way we're trying to push everybody for our communication so we can get off bombarding you with emails. And other than that, we look forward to seeing you guys soon. Everybody have a safe and happy rest of your week. Over and out.
Thanks for listening to the Seattle Investors Club podcast. If you have questions that you'd like to have answered on the show, shoot us an email at info@seattleinvestorsclub.com. Now go out, take that action, and build that real estate business. Thanks for listening.